You all, this is not good news. If you look at this chart right here, you see that the median sale price, according to Redfin data, is now higher than home prices of last year. And this trend is just going upwards, right? Last year, we reached our peak towards the end of June, and then we started to taper off and go down, especially when interest rates started to rise. But this blue line, which is representing 2023, is just continually going up. And are they going to reach a peak sometime this summer? I'm not sure. Maybe it's going to be late August. But usually in the housing market, we reach our peak during these months right here. But this year is different, right? Because supply issues are lower and things of that nature. But this is not good news for the housing market, that we now have median sale price being higher than it was last year. This is our recovery year, right? 2023 is the year that home prices should fall and crash. But that's not happening right now. It was lower for most of this year, right? You see that it's been lower than this black line for most of this year. But for some reason, it went higher recently. Redfin has reported that the U.S. home prices rise for the first time in nearly 5 months. The U.S. home sale price rose 1.5% from a year earlier during the 4 weeks ending July 9th, the first increase in nearly 5 months. Average weekly mortgage rates are at its highest since November of 2022. Typical home buyers' monthly payment is near record high at $2,627. To look at the hit on affordability another way, a home buyer on a $3,000 monthly budget can afford a $450,000 home with today's average rate. That buyer has lost $30,000 in purchasing power since February. You see how much home can you afford as mortgage rates changes. You see the higher the interest rate, the less of a home that you can afford, obviously. And so these are the different leading indicators to what's happening in the market. So mortgage purchase applications during the week ending July 7th still rose 2%, yet mortgage rates are rising, yet home prices are rising, but people are still out buying homes. Who are these people? Is it just a bunch of rich people buying homes? Or is it actually everyday people stretching their budget and getting into homes they really can't afford? And this will eventually crash and burn in maybe a year or two, right? Maybe we're just not there yet, because last recession, it did take a couple of years for home prices to truly hit its bottom. And maybe that's where we're at. We're still reaching our peak, and then eventually in 4 to 5 years, we'll reach our bottom. Maybe we're just repeating that history. But the things, or the way the economy's been acting, we've been super reactive to prices. And so I was thinking maybe it won't take as long to hit as bottom this time around, but maybe it will. And I think the Fed not hiking interest rates has a direct effect of home prices still being elevated. I believe the Fed should have been aggressive, still kept on the pace of raising interest rates. And I think this is causing home prices to rise. I bet we're going to see the CPI report and the PCE report coming up with higher than expected inflation because home prices are still high. All these different things are still extremely high. But I want to know these people buying these houses. And I know maybe people are just now used to 7% interest rates, are now used to the medium home sale price being close to $400,000. And even I'm looking at properties still, right? And seeing what I can do. Maybe I can rent out a room. Maybe I can turn the basement into a mother-in-law suite to get some rental income. Maybe people are doing that, but the average person I know don't have these thoughts, right? And maybe I need to hang around some different people, but I just think it's super interesting. But sale prices increased most in Milwaukee, Rhode Island, Miami, Cincinnati, and Newark, New Jersey. All right, so we have Florida still, we have the Midwest, and we have the Northeast. So the West Coast is not even on this list. So home price declines still Texas, and then the West Coast, Phoenix, and Las Vegas. I'm surprised not to see like a California city here. Maybe California is rebounding also and things of that nature. But I think this is so alarming right now that home prices are rising and they're higher than what they were last year around this time. And I know this is when the Fed were super aggressive. They were hiking up interest rates like crazy, like 50 basis points, 75 basis points. That's why you see the steep drop. Hopefully we can see a steeper drop where this blue line goes below the black line, and so we can reach some sort of price stabilization in the market, because this is ridiculous. Now let's look at new listings. New listings went down again, which is natural for this time of the market, but it's 26% lower. Let's look at just the inventory levels. active listings, So active listings are lower than what they were last year. For most part of this year, they were actually higher, way much higher. Earlier this year, it was probably a good time to buy a house because interest rates were a little bit lower. They had more inventory and home prices were of course lower because January home prices, they're not as high as summer prices. So January probably would have been the perfect time. February would have been a perfect time if you want to buy a house. But I think this winter we'll see some price stabilization, hopefully, in the market. Let's go back to this Redfin report and read what else they're asking or what else they say. So pending home sales were down. They declined most in Cleveland, Newark. Okay, this is very interesting. So pending home sales fell in these places where sale price increased most. So you have Milwaukee here, but pending home sales fell 23%, right? Because they have less of an inventory, so that drives the prices. You have Cincinnati for sale price increase, and you have them right here also for pending home sales. Very interesting that you see the correlation between the lower the pending home sales amount, the higher price increase was, right? And so that's interesting. For example, you see Austin went up, right? And Austin is one of the biggest droppers of home sale prices, but they increase in their pending home sales. New listings of home sales fell 26%. So it's just supply issues and everything. But it's crazy that even though we have supply issues, people are still okay with paying a mortgage rate. What's the average mortgage rate? Of around 7%. So the daily average 30-year fixed rate was 6.96%, down from a half-year high of 7.22%. So it is down a little bit, but it's still close to 7%. That's what we're dealing with today. I know on this channel and other YouTube channels, you're probably hearing home prices will crash. The housing market will crash. The way the housing market works, it's not going to happen this year. Home prices will go lower later this year. We will see a drop in home prices, but it's not going to be a crash. It's not going to come to the point where it makes it way more affordable for most people. Mortgage rates are just going to continue to rise because the Fed has promised at least 2 more interest hikes, right? And so that will drive up mortgage rates. And then supply is not going to change because anyways, fall and winter months, supply goes even lower. So it being low right now, that's only going to keep prices at least elevated, if not even increase home prices, which would be super weird because usually fall and winter time prices go down. So I think this is a very interesting data. And so let me know you all's thoughts on the housing market and things of that nature. I just wanted to make this video because I thought this was super interesting. Make sure you all subscribe to this video if you all have any questions or concern or your thoughts on the housing market. All right, talk to y'all later.